had a lot of commentary that came in from the RBI governor in terms of how he's flagged off how some of these interest rates are quite high for some of these NBFCs, MFIs. And to talk all of that and more in detail about that, we have Shah, Vice President at IIFL Securities, joining in with us this afternoon in the studio. Thank you so much for coming to the studios. It's a pleasure having you. Let's start with that comment that has come in, right? What is it in terms of the risk that it comes out for the NBFC? Is it much of a concern? How are you seeing? Yes, they've cautioned this before, but how do you see this now shaping up?
So I think RBI's pattern in terms of incrementally dealing with all the regulated entities is quite set. They have highlighted this issue quite sometimes. The deputy governors have highlighted in their interactions, and today we had a comment from the governor himself. So I think this is one key area that should be on focus. And he specifically called out the MFI subsegment, and that is a place where we believe that some of the higher rate lenders will have to take a rate cut. In fact, couple of them have already announced that they are going to take anywhere between 50-70 odd basis points of rate cuts over the next few quarters.
And which are those companies you believe in terms of, let's say, the exposure to rural, or the companies that have that high interest rate, small ticket loans? Which are those companies, and which are the ones that you're saying that they have already talked about of some sort of rate cuts as well?
So I think primarily it's the NBFCs which is there, which actually the NBFC MFIs, where this issue is in terms of the higher rates. The ones are Credec has announced, for instance, that they are going to cut rates. Similarly, Spandana has announced that they are going to cut rates. So we are seeing this trend across all the MFIs, and it should play out for the other MFIs also over the course of next few quarters.
And what will be then the impact on the NIMs and the profitability? Is it going to be a huge change and something that the investors will have to reset their investment strategy about, or this is something that you're expecting for the entire sector in any case?
So I think a lot of analysts and investors have kind of built this in their numbers, and the impact is going to be actually gradual, given that these are 2-3 years fixed rate loans. So the impact is always on an incremental basis. So it will take 2 to 3 years for it to play out fully in terms of the financials, and the quantum of it also would vary. If it's a 50 or 100 basis points of kind of a rate cut, in the kind of the construct of the ROAs that MFIs make, it should be easily digestible.
So you're saying it's factored in the market prices right now or not?
Market prices, I think not necessarily. It's I would say specific to names, because some NBFCs and MFIs have announced, some have not yet. So it just functions accordingly.
Okay, and given that we've seen the election verdict, post that the announcement and everything that is coming in, anything on a specific focus do you think will be more on the smaller side, or which of those NBFCs do you think that have a chance to benefit a bit more, or what do you like right now?
So I think incrementally in terms of the space, the way I look at it is that given the kind of verdict that we had in terms of the elections, it's plausible that the incremental focus would be more in terms of augmenting the rural cash flows. And over there, some of this agri-focused NBFCs, or who have more exposures, the likes of your Chola, Shriram, Mahindra, they stand to benefit. And those are actually also our top picks. Another reason is also that what we are seeing is that our preference is for the corporate backed or AAA rated NBFCs, because these NBFCs stand to benefit in an environment where the spreads are rising for the smaller NBFCs.
Okay, do you track the housing finance sector as well? Because there as well the expectation is that that affordable housing scheme that the government has been talking about might take shape sooner rather than later in the 100 days itself. If that's the case, which housing companies would you bet on?
So right now we don't have active coverage in terms of the housing finance companies, but the way we look at this space is that in the sub-segment of affordable housing, which is more than 1.5 million ticket size category, over there we are seeing structurally the competitive intensity is rising. Essentially the larger HFCs are getting into that sub-segment, and also some of the smaller ones are getting over there. So that is a place where we see structurally the competitive intensity rising. Apart from that, I think as you mentioned, one of the measures that could also come through in terms of a populist measure could be affordable housing. So of course they would stand to benefit from that front.
Okay, sure. And just a question in terms of overall in the medium term, what is it that one should watch out for? Like right now, I'm just reading, I think it's your note as well, where you're saying that L&T Finance, that is the one which is still in terms of the interest rate is quite high. So would that be something that you would still avoid, or do you think they will also follow suit, and what is looking attractive in the medium term?
So I think I would not want to get specifically into specific names, but since you called out that name, I think it's not just that NBFC. Probably all the MFI lenders at some point of time they will have to cut rates, and that is a place where that NBFC also has an exposure, and that is why we are a bit cautious on it. In terms of the preference, I think our over a medium-term outlook, our preference is for Chola Finance. There we see clear-cut, I would say, growth visibility as well as earnings growth being faster than the EVM growth.
Okay, Viral, these were like the questions that we had for you. Thanks so much for making time and coming down to the studios. Appreciate you coming to the ET Now studio.
If you like this video, then like, share and subscribe to ET Now.